You are wondering whether a mutual fund loses its edge once it becomes too big. When the assets under management crosses, let's say, 50,000 crore, does it drag its performance and lose its agility? Should you start investing in such a fund or continue investing in such a fund or stop? In this video, we will try to answer these 4 questions. Large funds, do they lose their agility? Number 2 is the biggest problems faced by this large funds, and it is not even what you think. Number 3, we'll look at actual performance of large equity funds and make some notes out of that. And number 4 is what should you as an investor do when your fund grows too large. Do funds with large AUM lose their agility? Let us look at it theoretically first. These funds need to prepare for large redemptions. So how do they prepare for large redemptions? They have 7 to 8% cash, invest in high quality, large cap stocks. And because they do this, they generally slowly tend to drift away from their mandates. So yes, on paper, theoretically, it appears that larger funds will have a loss in agility. But here's the thing. I don't think this is the biggest problem they face. Let us talk about the biggest issue faced by funds with very large AUM. We will start with an example of Nippon India Smallcap. As on the day of recording this video, the asset under management for this fund is 66,602 crores. At the same time, the market capitalization of the last 10 stocks in the Nifty 250 small cap index is 74,000 crores. Now let us assume Nippon India Small Cap owns 10% of the last 10 stocks. So the total investment should be 10% of 74,000 crores, which is 7,400 crores. So we want to know the effect of this investment on the fund's NAV. Let us say the last 10 stocks which we invested doubled in value. So essentially, they returned 100%. So 7,400 crores, which was our investment, became 14,800 crores. So essentially, 7,400 crores got added to its the assets under management, and the new assets AUM becomes 74,002 crores. Do you know the effect of this on the NAV? The NAV goes up only by 11.25% approximately. What? So my last 10 stocks on which I invested 10% doubled in value and the NAV went up only by 11%. And that's the problem, folks. When a fund becomes too large, the smaller bets, even if they double in value, do not result in a real advantage for the investors. It does not move the NAV by much. And my personal belief is that such funds start to behave like an index fund. But obviously, before passing judgments, let us look at what the actual performance data tells us. I'm looking at equity funds with AUM greater than 50,000 crores across these categories: large, mid, small, flexi and value funds. So here is what stands out. For value funds and flexicap funds, they're able to manage it quite well. They're having the freedom to move around different market caps and choose the stocks. So they're managing the large AUM quite easily. Large cap funds also, I don't think there is a problem. SBI Blue Chip is just having a problem because other factors are probably at play, because as you can see, its underperformance started way earlier. So far, mid-cap funds are also able to manage this large AUM quite well. Now coming to small cap category, I think that is where the cracks are starting to get visible. So we talked about Nippon India Smallcap Fund, and that is where underperformance is slightly starting to see in the last 1.5 years. Should we worry yet? I think personally, I would say no. I'm a big fan of this fund as well. So we need to watch it over the next couple of years to see if this is a sustained drag. Very simple strategy. Pair it wisely. What do I mean by that? So for stability, invest in the fund with large AUM. And for agility, invest in the fund with smaller AUM. Pair them up nicely in the sense that their holdings are not correlated. There are many tools which allow you to check if two mutual funds are highly correlated or not. And if you're still anxious, just take the index route.